I have a major warning if you like Bitcoin in the crypto space. Bitcoin has just entered the Quicksand on the legendary Gaussian channel, something it's only done 5 other times in history. The Quicksand sucks it down and sucks it in, and it's a bloodbath for at least 250 days in the 5 other times it entered Quicksand. Take a look. 2023 entered Quicksand, bloodbath, 460 days. 2019 entered Quicksand, sucked it down, had a bloodbath for 250 days. 2019 earlier in the year entered Quicksand, sucked it down for 405 days. Prior to that, 2015 entered Quicksand right here, sucked it down for 570 days of recovery. 2012 was the very first time we ever entered Quicksand. We entered right here, and it was a bloodbath for 295 days. Finally, we recovered. So Quicksand on the Gaussian channel is nothing to play with. On average, this has stayed in for 1 year. The shortest time was 250 days back in the COVID crash. So what is about to happen? What is the latest and greatest with this Quicksand, and what do we expect? Because right now, Bitcoin is also in a bull flag. So does this change the game? Well, I found 2 other times in history that we had a bull flag leading into the Quicksand, and we're going to discuss the latest and greatest inside of this video. What is happening with this Quicksand, and is it going to make it way worse for Bitcoin and your favorite altcoins? Let's dig into the facts. Do you love altcoins? Do you want to hear my opinion of the top 4 altcoins with huge potential right now? Well, I made an exclusive bonus video. To unlock it immediately for free, go to cryptocrewuniversity.com. Again, that's cryptocrewuniversity.com. Go unlock it immediately for free right now. If you're already on my email list, that video is already waiting for you. Hi, I'm Steve. I quit my job over 13 years ago, been traveling the world since, thanks to my trading and investing skills. Join me for sponsorship-free TA with genuine value that actually works. Subscribe. Here we are, Bitcoin US dollar index, and we are on the 5-day chart. There's a couple things we need to discuss right away. First of all, why the 5-day chart? Second of all, hey, wasn't this Quicksand? This is an absolute no. This was not Quicksand. We'll explain why. So first and foremost, why the 5-day chart? Well, we love to look at the weekly chart. And when we look at the weekly chart, we can see when we enter Quicksand, when we touch Quicksand. But what we've noticed over the years, and we've been covering the 5-day chart for years here, is when you go to the 5-day chart, you get everything just sooner with no false signals. So if you're deciding between the 7-day Gaussian and the 5-day Gaussian, it's an easy choice for the 5-day because you get the information sooner and there are no false signals. So it's almost like you're somebody from the future. Now, when you look at it, the Gaussian channel is comprised of a green color and a red color. In trading and the Gaussian channel, red is really bad. That's when we have our bear market. Case in point, 2023, red for all of these days, worst price action. Also here, red, worst price action. Also here, red, worst price action, and so on and so forth. Red represents pretty much every bear market. And pretty much every bull market is represented by green. Now, what you can see in the Gaussian channel are there are 3 lines. The median line is this one right here, and this is the top line, and this is the bottom line. Now, in simple words, these represent support and resistance. It depends what's happening, but you can see the median line will act as support until proven otherwise. And then once it's broken, it will act as resistance until proven otherwise. So that's it in a nutshell. So here is where Quicksand happens. Tilt your phone to the side and subscribe. Quicksand is, and all of these rules need to be true. What happens with Quicksand is you change from red to green and you have a prolonged upward trajectory of movement, typically very, very bullish, that happens to be very far from the Gaussian channel. And typically it gets further and further away. And when price action reverses And everyone in the herd says, oh, this is just a pullback before the next all-time high. And we touch the Gaussian channel. The Gaussian channel acts as quite literally quicksand and sucks price action in, and it typically ends in at least 1 year of turmoil. But the rules are it has to change from red to green with a long period of trajectory of upward movement way away from the Gaussian channel, and then a move into the Gaussian channel after a prolonged upward movement, and that is the quicksand. All of those rules are true every time we touched. Look here, a change from red to green, upward price movement, nowhere near the Gaussian channel, spike price action, plummet in price action, touch the Gaussian channel, sucks us in like quicksand for almost 300 days. All of that is true every single time. Here, we didn't even touch the Gaussian channel at all. Prolonged move to the upside, huge move away from the Gaussian channel, a touch into the Gaussian channel, sucks us in like quicksand, and it's a bloodbath. It's a simple way to see deadly moves in the market. This has been our cheat code for a very, very long time, years and years. If you're new to our channel, make sure you hit the subscribe button right now. But what we can see happening is that this meets the criteria. We have a prolonged upward move way away from the Gaussian channel, and then a pretty downward action, huge correction into the Gaussian channel, and it's starting to suck us in. We're 30 days into the Gaussian channel. More on that in a moment. But for those who are like, hey, this is a move, no, it doesn't meet any of the criteria that we've established for the past few years. It did move from red to green, but there's no prolonged move, no move far, far away from the Gaussian channel. None of the rules are true. This is not a typical Gaussian channel quicksand action. Now that we have that clear, I want to touch on these bull flags as well. But what you can see is we are about 30 days in from dipping our toe into the Gaussian channel, 35 days in. So I wanted to compare the price action of the past 35 days to other times where we just entered the Gaussian channel, just dipped our toe in. What are those 35 days look like? And can we take any huge factors from that and apply it to this? And then we're going to cover the bull flag. So first, the first 35 days. You can see we dipped our toe in the Gaussian channel here on precisely August 3rd, and we spent the next 35 days in turmoil, wondering, are we going to be sucked into this Gaussian channel? Do we have any chance to break out of it? What is going on? So let's dig into the first 30-ish, 35 days that we entered. Back here, we entered in September 8th, 2011, and we're looking at the first 35 days. What we noticed right away is this was relatively bearish. Not only did we enter quicksand, but it quickly pulled us in, and we started holding some support at this median line, and that broke within the first 35 days. And then we started holding the median line as resistance, which is what I told you in the beginning of the video. That's what to watch for. When you start holding it as support, that's good. But as soon as you start holding that median line as resistance, that is horrific. That tells you a big crash is coming. Now, do you love altcoins? Do you want to hear my opinion of the top 4 altcoins with huge potential right now? Well, I made an exclusive bonus video. To unlock it immediately for free, go to cryptocrewuniversity.com. Again, that's cryptocrewuniversity.com. Go unlock it immediately for free right now. If you're already on my email list, that video is already waiting for you. When you look at the first 35 days here, we can say, okay, that's pretty bearish. Now, to refresh your memory of what the first 35 days look like for us right now, let's take a look so that when we compare the next cycles, you have a good idea. We entered quicksand here. We held support at our median line with a huge wick. This told us there was a lot of buying pressure coming in at this wick from back on October 3rd. Keep in mind, That's pretty much a month ago, right? That is huge bought up. And then we spent the next 35 days really battling, but pretty much battling with the top line here. Remember, Gaussian channel comprised of 3 lines: top line, median line, bottom line. First 30 days, we never touched the bottom. We only touched the middle line once, hugely bought up. And we spent the remainder of the time pretty much battling with the top line. Now, when we go back in time, we already covered the 2011, pretty bearish. Let's cover this one here from 2014. So you can see we had a huge move to the upside. We started moving down in a bull flag, mind you. We'll come back to the bull flag in a moment. But again, look at a median line. Entering Quicksand here on March 27, 2014, quickly coming right down to the median line, holding support and continuing to hold support at that median line, seeing a bounce. We bounced to the top of that channel, holding resistance at the top of that channel, pushed us back down to the median line. Then we broke it. Then we held the median line as resistance. That is the move I want you to watch for. This is the dreadful move that happens every single time. As soon as we start holding that median line as resistance, it's a telltale sign that a plummet is about to happen. That's what we don't want to see. But again, this is another one that was relatively bearish. We had huge support at our median line and we bounced back. Let's look at the first 35 days and kind of hone in on that. We're looking at roughly up to here. So in that first 35 days, we touched the median line multiple candles, and we touched the top channel once. So again, that first one, relatively bearish. That second one, relatively bearish, first 35 days. Let's see what facts we can find with the next one. The next one is 2018, right? Huge move to the upside, downward move coming into the Gaussian channel. We officially dipped our toe in on March 12th, 2018, and we're looking at the first 35 days, and we're up here. Tilt your phone to the side and subscribe. So first 35 days, we came crashing down to the median line. We actually held support momentarily, resistance momentarily, and we shot back up, holding some resistance at this top channel. This is a telltale sign again. You can see it playing out time and time again, where we enter the Gaussian channel, hold support at the median line. The next typical move is bounce all the way to the top of our channel, making everybody bullish again, thinking that yet another all-time high is just on the horizon. But we have that top channel holding it as resistance. It plummets us back through the median line for the first time, holding it as resistance, and then a downfall is coming. So you can see each one, it's pretty much the same. You can look at our next time, the 2019 top, 14K top. We start coming back down inside the Gaussian channel. This one was quite bullish, right? The first 35 days saw us here, where we started to hold some support at the median line. We came above that top line, holding some support above there, and came back down. So it was pretty volatile, but right in the first 35 days, it was more bullish than bearish. A lot of telltale signs. I'm going to take this information. I'm going to take these facts. We're going to go back to present day, and we're going to drop some clues, and then we're going to revisit that bull flag and talk about what that could potentially lead to. Now, when you start to dig into it, you say, okay, this was pretty bullish in the beginning. The other ones were pretty bearish, but the bull run continued here, and in the other ones, it didn't, right? That's a telltale sign so far. You saw in those other examples, it was pretty bearish in the beginning, and then it stayed bearish for a long time. Whereas this one, it was pretty bullish in the beginning, and this was the quickest amount of time, the smallest amount of time that we were ever in Quicksand. And this was in the middle of a bull run, and the bull run continued. So these facts we do have on our side. Now, as we dig into it further, the next time we entered here, right, you can see the first 30-ish days we're back here. We dipped our toe in right here, and we're looking at the first 35 days brings us to here. So this was pretty similar as well to present day, where it was pretty bullish. We did see heavy support at our median line during the first 30-ish days. Why is that important? Well, we still had our double top to get to, right? This was in the midst of a correction from our first top down into the Quicksand, and then we skyrocketed for our double top, and then officially into Quicksand for a prolonged period of time. So that bullishness here represented, hey, we're about to rally out of the quicksand to a double top, and then we will come back into quicksand and have it be a bloodbath. But the market just wasn't ready yet. So let's take all of those facts and look at today. One thing that we can take away from the first 35 days of dipping our toe in, keep in mind we haven't officially had a full body close below the quicksand yet, but we've dipped our toe in 35 days ago, let's be honest, right? So when you take that in consideration, we learned a couple facts from earlier. We learned that bullishness in the beginning, that first 35 days, tells us that we could potentially repeat some history, both from here, where our bullishness wasn't gone yet. We still had room for a double top, which we could still have room for a double top. And the other opportunity was here, where it was really bullish in the beginning, which told us like, hey, we were still in a bull run. We just needed to get some stuff out of our system, create some good market structure, and then it was the quickest time we were in the quicksand, and then it was back to the bull run. So those are the two data points that we are closely resembling at the moment when you take the bull flag out of the picture. Now let's put the bull flag in the picture and see what we've got. Do you love altcoins? Do you want to hear my opinion of the top 4 altcoins with huge potential right now? Well, I made an exclusive bonus video. To unlock it immediately for free, go to cryptocrewuniversity.com. Again, that's cryptocrewuniversity.com. Go unlock it immediately for free right now. If you're already on my email list, that video is already waiting for you. So what is a bull flag? A bull flag is, first of all, parallel lines. You have a line at the top that acts as resistance and a level at the bottom that acts as support. You want those two to be parallel to each other. You also want those two pointing down, meaning Bitcoin created a high here, a lower high here, a lower high here, a lower high here, while creating a pivot low here, a lower low here, and another lower low here. In other words, Bitcoin is in a textbook downtrend and there is no way around it. However, when you're in a textbook downtrend after having a ridiculous rally, that's called a bull flag. If you have the top level act as resistance and the bottom as support and they're parallel channels and all of those facts are true, which we do have in front of our eyes, a textbook bull flag. What I didn't mention is I like to have at least 3 touch points at the top and at least 3 touch points at the bottom, which we do. Now, all of those things are true. We have a textbook bull flag heading into quicksand. Something's got to give, because a bull flag typically is a continuation pattern, meaning it continues the pattern that happened prior to the bull flag. In other words, a bull flag typically breaks to the upside and continues its bullishness that it had right before entering said bull flag. Make sense? So a bull flag, high majority of the time, breaks to the upside. That does not mean every time, 100% of the time, it breaks to the upside. It just means the majority of time. Sometimes these break to the downside, which we hope does not happen. We do not want to start holding this median line as resistance. Now, median line currently, present day, is roughly 54, 55K. 54, 55K median line. Keep that in mind. We do not, I repeat, do not want to hold that as resistance with the body of any candle. Now, when you look at this bull flag, I want to compare it to these 2 bull flags and talk about what we believe to be true about this bull flag in the quicksand. So we're going to go over the facts first, and then at the end, I'll give you my opinion of these bull flags and the quicksand. Now, let's look at bull flag number 1. Bull flag number 1, 2013, April. It was a glorious time in Bitcoin because we were absolutely going parabolic, right? This is not a textbook bull flag. Why? Think about those rules I gave you. When you look at this, there are some clear reasons why this is not a textbook. Number 1, these are not parallel channels, right? You can make it parallel channel and you can put it here, but you don't have 3 touch points at the bottom, let's face it. So this is not a textbook, but it's got a lot of attributes as a bull flag, so I wanted to show it to you. What you see here is it had attributes of a bull flag. It broke out. This was our breakout candle. This was our confirmation candle. This is when you would have entered a trade, and then you would have reaped the rewards of here, where before we entered another bull flag. So this other bull flag is more textbook, and it does have multiple touch points at the bottom and multiple touch points at the top. What you notice about this bull flag is that we had some trouble with the median line during our bull flag. We broke out. This was our breakout candle. This was our confirmation candle. We rallied up to the top of this channel, and then we were rejected. So one thing to watch with any bullishness we see happening in the charts is it would be the worst case scenario to start holding resistance at this top channel over the next couple months. If we start holding resistance at the top of our Gaussian channel, you can see the writing is on the wall. It's only a downfall from there. Where it happened to be more bullish was we got out of the quicksand and we entered like we did back in our prior market cycle, right? We entered the quicksand here. We got out of it. We did not hold some resistance at the top. We broke through. We came down, held support at the bottom at the median line, and then really skyrocketed to our double top. This is the most bullish action that we want to see with Bitcoin. We need to see it really take out the top, and then we need to see it hold support at the bottom and break out of the Gaussian channel. That's what you want to see. Although, to be honest, it was short-lived, right? We could have another one of those, but time will tell. Now, let's get to what my opinion is, right? As I've said for months and months and months, I see this really clearly. It's the 2-month gravestone doji versus the weekly stochastic RSI paired with the 2-week. It's a tag team effort. And the 2-month gravestone doji is ridiculously powerful. And the only thing that could save the day is the 1-week stochastic RSI and the 2-week that could take us to a double top, or it could take us to an all-time high. And even if it did that, there would be really strong bearish divergence. That is what I told you months and months ago. All of that is still true all of these months later. And now we have the Gaussian channel quicksand to throw on top of it. So I can't say it any other way. There is a lot of bearish charts that have ridiculous facts. The only way that Bitcoin can survive, it has to continue to hold support this median line. If we hold resistance, it's significant trouble. And we have to start holding some support at the top of our channel here, which is at about 61. And we need to break out of this bull flag, and we need to avoid bearish divergence. We need to have a lot on our side to have like a serious bull rally from here with somehow avoiding bearish divergence. So long story short, the market could be bearish. The market could get bullish, but the question is for how long? When it got bullish back here, it was for really short. And here it took 250 days before it could even start to get bullish. So is Bitcoin in another situation like this? Now, another fact I need to say to you just very, very clearly and bluntly, Bitcoin has never entered the quicksand and not had it end ugly. Keep that in mind. Let me say that again. Look at all the facts here. Bitcoin has never entered quicksand and somehow gotten out of it. Here's data point number 1, data point number 2, data point number 3, 4, and 5. It's only entered quicksand 5 other times in the obviously right in front of you. There's never been a time of these 5 times we entered quicksand where it ended pretty, plain and simple, right? The prettiest of it was here, where we had 250 days of an absolute bloodbath, and then we finished our bull run. That was the best case scenario. I just want to paint a very clear picture as we move into this. All right. So we will continue to keep you up to date, but a quicksand is nothing to play with. Ask anybody who followed me in the past cycle or the one before that or the one before that where we entered quicksand. And everyone was like, there's no way we're going to have trouble with this quicksand because there's this bullishness and this bull. We're going to be an all-time high, blah, 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 blah. Quicksand always wins. Quicksand is undefeated. So I do want to state the obvious here, and let me know in the comments down below what you believe is going to be happening, and hit that subscribe button, and I'll keep you back up to date right here. Peace and love to the fellow underdogs. This bull run is our road to 500,000 subscribers, but I need your help. Today, tell one person about our YouTube channel, how we spit facts, go against the herd, take no paid sponsorships of any kind. Road to 500,000, let's go.